My name is Jacob Davenport, and this is the Growing in Real Estate podcast. I'm your host. I'm a real estate investor, a real estate networker. I'm a real estate agent. I do all things real estate because I love real estate. And the best thing that I get to do in real estate is I get to connect with like-minded individuals that are doing great things in the field. Today, I have somebody that's not necessarily only doing great things in the field, but has historically done these great things time and time again. And when you look at success and you look at somebody being able to really achieve something, there's a lot of one-offs. I see people get in real estate and they do one or two flips. But to be in real estate as a total for multiple decades, you don't often find many people like that. So without further ado, I want to introduce you all to my friend, my mentor, somebody that really was pivotal in me getting started in real estate and continues to have my back. Mr. Scott Liming, how are you doing?
Well, Jacob, thank you for having me tonight. Appreciate it. Good to see you again.
Likewise, always good to see you. I know you, but introduce yourself. Who are you? Where you from? Give us a little bit about yourself.
You want to go all the way back to when I was a child?
Give us the short. Give me the elevator pitch.
Okay. So I started in the mortgage and real estate business back in 1984. Worked for a finance company for about 10 years. Then went into wholesale lending, subprime. And then in 1998, I started my company, Iron Oak Home Loans. Built that as initially a brokerage. And in 2007, when we had what we refer to as the mortgage debacle, I converted the company to being a private money broker, lender, and servicing company. And that's really where I really enjoyed this business. People helping people from every aspect of lending. But so I retired 4 years ago, sold the company to one of my employees, and now I'm just a lender. I just still lend, and that's how I've been able to enjoy my retirement.
Man, and shout out to you. I again, I'll double down. When you're chasing success, when you're on the pursuit of your own journey, many people try, not many people achieve it. Not many people get to this chapter in your life where you get to harvest and enjoy the fruits of your labor and pick what you want to do with your time. I mean, you spend a lot of your time on the beach in Mexico. Is that right?
Well, my wife and I live there most of the time. Yeah, we are very fortunate. We don't take it for granted, and we love our time that we have now. Yeah.
Yeah, I think that when I think about like even maybe the American culture, when we talk about working hard and retiring, that story, whether you see it in cinema or anywhere else, it always ends with I just want to retire on the beach. And so when I say many never get that done, many talk about it, but you've achieved it. So hats off to you.
We're very fortunate. We've done that. We don't take it for granted. We appreciate every moment of it.
Yeah, you're definitely very humble spirit. What does life look like for you now? You said retired, taking some downtime. What does retirement look like for you?
Well, I feel like I'm retired, but some days I feel like I'm still working because I'm very active. I'm still the broker of record at my company that I sold. And I'm just very active in the lending, and I'm also a consultant to the company. I work closely with the two owners still to this day. They consult me for my opinions on things. And yeah, I help wherever I can.
Good. For our guests on Instagram, we're going to blast through this podcast and just really dive deep. Really some high-level things and some very simplistic things. But if you stay around towards the end, maybe the last 15 minutes, we'll have an open Q&A where you can drop your comments and questions. And Scott will answer them. He's an open book. He has nothing to hide. I mean, he's here to empower people. So I hope you all stay tuned and make sure that you ask the right questions. And if you're looking for a hard money lender, he can point you in the right direction. He's grown a company that's very successful and again, humbly hasn't retired. So that's really good. So you're retired.
Yes.
You worked a ton. I want to get into, there's different parts of real estate investing or real estate. There's the retail real estate of buyers and sellers and agents. And then there's flips and hoteling where you rent out your house, you do Airbnbs, all that creative, thrifty stuff. And I think that there's the life and blood of every aspect of these things is the financials. Whether you're a real estate agent and you make a commission, whether you flip a house and you sell it, at some point, a loan or a mortgage is going to be navigated through that process and utilized.
All right.
without money, this can't happen. And with money, you can make more money. So what made you want to get into mortgages of all the opportunities that you can get into?
Well, when I first got into the business, the goal was to become in upper management in some company, whichever company it was that I ended up at. And I've worked at a couple of different companies for the first 14 years of my career. By the time I got to that point where I was in upper management, I didn't like the job. The part of real estate that I liked is I liked working with people. I liked helping people. I liked putting deals together where everybody wins. Something that's always been very, very important to me in this business is that whatever side of the loan you're on, whether you're the buyer, seller, lender, everybody needs to win. If everybody isn't winning, I don't want to be a part of it. And that's how I built my mortgage company from the private money side. The buyer is buying a piece of property that's in bad shape. They get a loan from me. They fix up the property. They're using Home Depot, Lowe's, Carpet One, door companies, roofers. So they're employing a lot of people. So those folks are winning. Mm-hmm. The neighbors on each side of that house who have been looking at that eyesore for the last however long it's been, they see a house just rejuvenating itself. And then a nice family moves in. And so, and that's just an example of a win-win. Mm-hmm. There's many examples, but that's just one where, I mean, you're helping the economy, you're helping the neighborhood, you're helping the values of the homes go up, and you're getting rid of an eyesore. Mm-hmm. And that's the huge thing with flipping. And as I know with you, you've done so much of that. And, you've taken some homes that may have had people that shouldn't be living in it, not taking care of it because it's gone to a foreclosure. You kind of swoop in, you pick it up, you fix it up, and you sell it to some people who really appreciate it. And everybody wins. Yeah. So, that's always been my approach. It's the way I ran my business is that there can't be one person losing so somebody else can win. Mm-hmm. And I think that's really important when you're building your business.
Yeah. So when I think about the business of real estate, I'm going to say a phrase, and you tell me what it means to you in regards to real estate investing in your experience. Business is about people. What does that mean to you?
Well, I think it all falls back to what I just said. It's people helping people build a business. Something we talked about a little earlier today. When you get into the real estate business, from whatever perspective you choose, whether you're a lender or a flipper or a contractor, flippers aren't necessarily always contractors. They're people that
I'm not a contractor, for the record.
Exactly.
I'm not a contractor. I just know how to put a couple of nails together.
But I think you find something in that avenue that you're passionate about, mm-hmm. and then you build on that. And like I said, I know this isn't the end game, but it can be part of the end game where you actually make a pretty darn good living.
Yeah.
And the way you make a pretty good darn living is when you own your own company.
I was going to get into that next. You said you frequently give me these pieces of wisdom, and you said that if there's two important things, and I'm going to misquote it. Maybe you can correct me. If you want to make a lot of money, do something you love, right? And the other component is work for yourself.
Yes, absolutely.
Yeah.
And again, there's nothing more gratifying than people helping people, mm-hmm. and actually getting paid well to do it.
Yeah. Yeah.
I mean, that's just the win-win.
Humbly, were you able to earn some money in lending?
I did okay.
You did okay. What does okay mean? And I'm not asking specific. What does okay mean? Well, I'm asking for perspective. I mean, were you able to make, $20? Were you able to buy a home? Were you able to in context, and we're not looking in your wallet. Put it in context for us.
No, there might be people watching me that they recognize his face. I don't want to get attacked when I leave the building.
Yeah.
No, it's you can be very, very successful. And again, not at the expense of other people. It's actually helping other people. And along the way, you look up and go, oh, okay, we're doing okay here.
Yeah.
So, I mean, I've been able to buy 2 nice properties in Mexico where we live, and life is good.
I need to get into lending is basically what I didn't know.
Well, no, I mean, this is something that didn't happen overnight for me. I mean, I spent 14 years working for companies and didn't start my own company till 1998.
Okay.
And again, as a broker, and then when the mortgage problem happened in our country, that's when I converted the company to being a private money broker, lender, and servicing company.
What was that moment like where you said, you know, it's time to make because you're talking about the great financial crisis of 08, 09 that we all know far too well. So take me back, 06, things are going good. 07, things are going good. What happens in your perspective, 08, not so much about the economy, but in your life that made you want to say, I need to pivot, or that light bulb went off?
Well, I think it was when I looked at my 2008 1040 and my adjusted gross income was $16,000. I said, I better do something different, because I went from running a 15 plus loan pipeline down to almost no loans in my pipeline as a broker. And that's when we bought a servicing software. And I just started talking to people I knew in the business, and we built it slowly. I mean, we were only 25 million for up to about the first 5 years. And then it just took off.
Yeah. Yeah.
And so the company that I owned services over $150 million. And we've got borrowers that we've been doing funding flips for over 15 years. And we've actually had flippers who now have become lenders with Iron Oak. They made so much money that they said, "Yeah, this loan side, I think I like this." So you're basically telling me that I put my money into this loan, and I just sit back, and each month I look in my checking account and the payments roll in. I said, well, that's pretty much it.
That's how it goes.
Yeah.
And that's good for those of you that are just getting into real estate or haven't gotten into real estate. There's a variety of ways that deals are funded. I said earlier in the podcast that there's multiple sides of real estate, but this financial component is always going to play a factor. We need money. Scott and others are in the business of loaning money. And when we talk about loaning money and lending, oftentimes when you hear things like FHA and conventional and VA loan products, those are more like what we call traditional loan products. What Scott's saying is that in his career, that's how he started off. He started off as a lender. And as he adjusted and he put in the work and the market changed and it put the world and the economy in a position to say, hey, what I've already been doing is no longer doing it anymore. There's no more squeezing any juice out of this way of lending for the moment because the economy shifted. So Scott said, listen, I'm going to be entrepreneurial. I'm going to take away the time clock, meaning this 9 to 5, this means working for somebody else. I'm throwing out the clock. I'm going to go work for myself. Nothing guaranteed, nothing promised, nothing easy, nothing given to me. And I'm going to get into the business of hard money lending. And so for those that don't know hard money lending, you describe hard money as offering a service for really 2 needs. What are those 2?
Well, to take kind of step back,
please.
When private money lending, when subprime lending and A paper pretty much went away for that period of time, that's when we decided we needed to do something different. And the private money lenders who had been in that arena were really struggling because, remember, we had values drop. And then second mortgages were huge private money business. And those guys were getting they were really struggling because they were losing a lot of money. But that was the perfect time to go into private money lending. And like I said, I kind of joke about this. I said, I've never sold ties before, but at this point, I can't live on what I'm making, and I got to do something different. So we really reinvented ourselves. And the way we reinvented ourselves is we bought a servicing software. I think we paid $10,000 for it, which is pretty cheap. And we just started calling people we know and said, hey, here's what we're doing. We've been in the business a long time. And here's our criteria. We put out a criteria of what types of loans we would do and what the rates were. And we just did it one loan at a time. But it was there were some dark days because it was very uncertain. Yeah. No more salaries, no more
bonuses, no more big commissions.
No. Right. And I don't know if you remember, this might be before your time in this business, but there were over 300 subprime lenders. The New Century, Fremont Investments, Option One, AmeriQuest. They're all these. They all went out of business.
They folded.
Yeah.
And I want to add context to that because it's more than. I mean, what you're saying is accurate. I understand it, but to put it in perspective, during the financial crisis of 2008, for those that were old enough, right? And I kind of remember every house on my street. I was in high school. Everything was for sale, and the values continued to drop. Agents were out the business. Lenders were out the business. Every lending institution just about was closed and or under investigation. Real estate was not the business to be in. You were working very, 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 very hard, maybe to make a penny. And so for you to say, hey, we're getting beat up in the business, everybody's leaving the business, you know what? I'm going to stay in. Either you're extremely crazy or you have this entrepreneurial spirit.
Well, we like to think it was an entrepreneurial spirit. We saw it as an opportunity.
Yeah.
We looked at it and went, we got all these private money guys that are out there that are just getting, just beat up, and they're losing a lot of money. Mm-hmm. Values are as low as they're going to get. Mm-hmm. This is the time to get in.
Yes.
Because values are going to do nothing but go up.
Right.
And so we seized an opportunity, and we did it. We didn't try to build Rome in a day.
Yeah.
We took it one loan at a time, one new investor at a time. I mean, the way I approached it, I'd have somebody say, hey, listen, I got to put $500,000. I don't want to put it in the stock market. I'm afraid of that. I want conservative type of investment. I said, well, if you could make 10% on a well-secured investment, would that interest you? Well, yeah. Mm-hmm. So I would actually take these people and typically I knew them, to a property that was going to be purchased and walk them through the whole process. And there are some great stories that I have where I'd go out and see a property with a homeowner was somewhat disgruntled because they lost the property, and they had gutted the kitchen. And the lender comes and says, well, I can't make a loan on this property. I said, oh no, the previous owner did you a favor. The guy buying this property was going to gut the kitchen anyway. It's already been done for him. It's a couple $1,000s saved in demo. Mm-hmm. And so I would educate these investors who are really lenders on how to do private money lending and what makes sense. Mm-hmm. I mean, when you go to buy a property, if you go into a property and I mean, it's at the studs, that sounds like an opportunity to me because you're going to be able to buy it at a very good price, and you don't have to peel back the onion. It's already been peeled back. Mm-hmm.
No surprises. Blank canvas is a term I hear often. So, I mean, there's two things I want to ask you, because when you say that you're launching this business, some people the business is about people. It's always good to work and connect with people that you know, like, and trust, right? Mm-hmm. These people you have gained trust with. How important is trust and reputation in that business or any business? What does it mean to you?
Well, as a private money lender, I used to refer to the people's money that we lend was like the blood in your veins. Without it, you're dead. So we had an incredible responsibility to treat their money more importantly than we treated our own. Because if you lost your investors who were funding these loans, well, you're out of business. And so we took a very conservative approach, and I don't think we had a foreclosure for about 10 years because we were low loan to value. And folks who don't understand the term loan to value, just a basic example, if you had a $100,000 property and you did a $70,000 loan, it's a 70% loan to value. So you've got equity. Mm-hmm. But yeah, the trust is everything. And trust takes a long time to build. And I mean, it's very cliche, but it's very easy to destroy. And we've gotten to the point as a company where we'd call up one of our lenders and just say, "Hey, we got this deal," and they would say to me, "Send me the wire instructions. Tell me when to fund." And I'd be like, "No, let's take a step back. Let me tell you about the loan first, so that you know what you're putting your money, your $200,000 or $300,000 or $400,000 into."
But they trust you that much.
Yeah, they really do. But that's but we won't let them. We won't let them just say, "Oh, you have a loan for me? Great."
Yeah.
But one of the other things that was funny about in building this business is we'd have people who say, "Well, I've got $100,000," and they do a loan, and I'd look up 8 months later and I go, "Gosh, that guy's got $1 million with our company," because it's very addictive. The private money lending.
Why is that?
Because it's real estate secured. Uh-huh. It's low loan to value. It's low risk, and like we talked about a little earlier. In a sentence, our business is we make loans to borrowers or property that don't currently qualify for conventional financing. And that can be for a lot of reasons.
Say that again for me one more time. Say that for us.
Okay.
You loan money.
We make loans to people or properties.
People
or properties that don't currently qualify for conventional financing for a myriad of reasons. It could be, I think we were talking about at dinner. So somebody's been on a W-2 for the last 10 years and they go start their own business, but they've only got 1 year. I think Ashley was telling me, she said that, yeah, because she does conventional financing. She said, well, yeah, if you've only got 1 year business yourself, you can't get a conventional loan. Mm-hmm. So you'd get a private money loan for that 1 year. We don't charge prepayment penalties. You pay interest only while you have the loan, and then go get your conventional loan. Mm-hmm. Another perspective would be property condition. That's why flippers love us, because they come to us. They can't get a conventional loan, so if they don't have the cash to buy it, to pay cash for it, they've got to get financing somewhere. And the third thing is well, it's pretty much that's it. The property condition.
I'll take it. I'll take it. I'll keep the change.
Yeah.
Yeah, that's good. Let me pull us back a little bit, because this podcast is always, and as its title is, growing in real estate, and our focus and our whole commitment is to empower and educate and really help the people that become first time investors. When you work with a lot of people that, like you said, start off as flippers, grew a portfolio, become lenders, and had been very successful, just like yourself. What I have learned in my journey to real estate, and let me fact, I've been in real estate 7 years. My very first flip that I ever did, Scott did it. I met Scott through some ironic circumstances of a lot of people in the market that I was working in. After building a relationship with him, building some trust with him, I called him one day. I said, "Scott, man, I have this property I want to flip. What do you think about it?" He said, "Send it over to me. Send me the prelim." I sent him the prelim. He said, "I'll tell you the truth." He said, "I'll send the money next week." That's what he told me. And it wasn't that simple. It was for me, actually. But that's not how it always works. There are credit checks. There's a variety of things that need to take place. You have a responsibility. But what I'm saying is, for me, at the time, I fit the criteria for the most part of either a property or individual that needed some funding. And Scott was that person for me. So I want to tell you thank you. I don't know if I tell you thank you enough. You always shy away from my thank you.
You don't have to.
But again, for the podcast, that's the focus. Always trying to help people get through the first one. Finances seem to be the people's biggest problem because you say, I want to get into real estate because I want to seek the benefits of making enough money so one day I can retire on the beach. But if you start with no money, how do you get there? Well, you got to do something.
Yeah, that's tough. I don't really have the answer for that. If you have nothing.
Yeah.
I'm not sure.
Build relationships. And there's some strategies.
Have a rich grandfather.
Have a rich grandfather. No, that's not how it works. It's some, but they don't, maybe they don't appreciate it. But what I'm saying is, when you look at individuals that are trying to get into real estate, they can solve the money problem. There's gap funding. There's a variety of different things they can do out there. But you talk about, in your entrepreneurial spirit, the importance of Rome not being built in a day. Speak for me to the people that want to get in real estate and need to, or should, maybe if correct me if I'm wrong, they should adopt this concept of one step at a time, one block at a time, whether it's information, education, or do you just become a success overnight?
No, you don't. It doesn't happen overnight. If it happened overnight, everybody'd be doing it, right? Mm-hmm. I think in buying, if you want to be a flipper, everything starts with the buy. Mm. If you find a property that you can pick up for $100,000, just as an example, and you're only going to need to put 50 into it, and it's going to sell for 500, you're going to be able to find somebody that will help you. You just have to find that person. And then you make them a partner. And you say, look, I'm going to do everything, but I need the seed money to do the down payment, to get the loan, to then do the remodel, and I'll share the profit. That's just an example.
Facts. If you have no money and you want to be a success in real estate, first go get a job. Chevron, McDonald's, wherever it is, get a job so you can have gas to drive to property, so you can get a subscription to any of these platforms that give you data for properties, right? Just get a job so you can maintain yourself, right? And then you can take a guy like Scott out to coffee, or somebody that you'll meet. Build trust within yourself. Understand who you are, where you're at, and what you need to do to be able to communicate that trust with people. But do everything you can to analyze as many properties, find deals, because if you find deals, it will be very easy to get the seed money for the debt. Now, what's the deal? You just kind of explained a discounted property, essentially. I get people that reach out to me all the time and say, I want to start in real estate. And I don't have any money. Well, go find a deal. How am I going to find a deal? Well, that's how you're going to make the money.
Yeah, that's exactly right. I mean, it's a lot of bird dogging, a lot of just, beating the streets. One of the things I've suggested to people is talk to realtors who are involved with asset managers. Mm-hmm. Realtors who are very successful. A lot of them work with asset managers, banks who own foreclosures, and they get the first opportunity to buy. And there are times when banks will let properties go pretty cheaply. Mm-hmm. And then you build a partnership with that realtor where you say, if you get me the property, when it's time for me to resell it, I'm coming right back to you, Mr. Realtor.
You can take the listing.
And you're going to get the listing. That's just one way. There's a lot of ways, but scouring the foreclosures, going to the courthouse steps and seeing if who's buying what, and it can be a lot of initial legwork where you're not making any money, but you're learning and you're finding. And again, it's all in the buy. It's what you pay for the property, and then, of course, then doing your due diligence to see, okay, when I peel back the onion, the term, what's it going to cost me to rehab it, and then what am I going to be able to sell it for? And those are all the factors of a successful flip.
Yeah, I agree. You have to buy right. You get a property becomes a deal, not by you getting it and getting discounted material and discounted labor. That's cool. But the most responsible way and effective way and scalable way to grow in real estate is to acquire it as a deal, as a discount. When you purchase it, it's a good deal. And any discounts in addition, that's a cherry on top. So that's cool. But you don't force it and you don't create a deal by closing on something that doesn't pencil out. Always remember that. Remain disciplined. Have a buy box and a list of criteria, things that you're looking for in a property, things that you're not going to get involved in. If you don't have the resources or the know-how to lift a foundation, don't buy a property with the messed up foundation. So educating yourself, understanding what your buy box is will take you a long way. In the nature of peeling back the onion, I think that committing so many years to the financial component, I mean, you've done it all in real estate, but the financial component, help me peel back that onion. There's things that the unknown, there are things that the average person would not know about navigating hard money. You talked earlier about how that's really structured. Where does the money come from? Well, there's people out there that have a lot of capital and want to park it somewhere and get a better return, or they like the way that this investment behaves. I guess one thing I'll ask you is, by no means disclosing any of your clients or relationships, but when you say people have money that they invest with hard money companies, what are careers like or bank accounts like that people will invest? I mean, have you had clients that had $5 million?
Yes. Yeah.
Give me a figure. Give me a concept to understand how much money people have out there that they would invest.
Well, without saying any names, I think the biggest investor we had about 25 million in loans with us. That's a pretty good monthly income.
25 million in loans.
And everyone in this room would know who he is, but I can't say his name. But
is it you?
No, it's not me.
Oh, okay.
No, I was a little under that.
There you go. There you go. Good. Good.
Yeah, we have several 7-figure investors.
Yeah.
It's very addicting when it just looks and becomes so easy, and that trust level has been achieved between the company and the investor. It's it's just a real win-win for everybody, and very, very lucrative.
And again, you look at different aspects of real estate and different aspects of investing. Where I'm at in my life and my peers, we're active investors. We're finding off-market deals. We're bird dogging. We're connecting with wholesalers. We're connecting with other real estate agents. We're going to the courthouse steps trying to buy right. And that's real estate flipping is very tough for those of you that think it's easy. It's not easy. It's simple, but it's not easy. And then you get to this chapter, I call it the promised land. I only know of it because of Scott tells me these stories of retirement, that the promised land could look like, instead of you actively flipping your whole life, at some point, you flip, park it in real estate. Flip, park it in real estate. Flip, and then you take that money and then you become a lender.
Well, I have a term is that I'm very fortunate to be able to get to do, and it's, I don't work for my money. I let my money work for me now. So it's and that's just because all I do is lend. But something that I just remembered what I wanted to mention about peeling back the onion for people that are buying properties, foreclosures, whatever they're buying, age of the property is very material. If you're buying a home that's a foreclosure, it's only 10 years old, well, the bones are probably pretty good. It's when you buy that 60, 70-year-old house, that's where you better have a contingency of 25 to 30% above budget. Meaning if you think the budget's $100,000, figure $130,000 for the remodel. And that's a really important thing to know. One of the things I still do, I have a brother that lives in Pittsburgh, and I'm his funding source. And every property he buys in Pittsburgh are all Pittsburgh, Pennsylvania, not Pittsburgh, California.
Right.
And so he buys these older homes, and invariably there's things that come up that they just didn't expect. Oh, here's another 10,000, and here's another 20,000 here that they end up spending to get the property where it needs to be. But that's important. Age of property when you're looking at properties. Newer properties, of course, have less challenges. I mean, some things that are just really basic. I wouldn't buy a property that sits on a hill.
Mm-hmm. Why is that?
Because it's on a hill, because it could fall into the.
Yeah. What about gas stations?
You'd never make a loan. I won't make a loan next to a gas station, across the street from a gas station, within probably 100 yards of a gas station.
Why is that?
Because of contaminants. Okay. Because the gas tanks that are below ground that have been leaking. Mm-hmm. Yeah, I did some commercial lending years ago, and we actually did loans on gas stations, but we had to make sure those tanks were post 76 tanks and phase 1, phase 2, which are environmental reports to see what the conditions of the soils are. And it's pretty boring.
Yeah. But serious stuff. Those are things that pose as a risk. And if you don't know those type of threats or risk, and you don't manage that, you don't have that information, you'll get in a lot of trouble. You buy a house anywhere close to a gas station, you think it's a good deal. All the numbers pencil out because there's some there's some appraisals or some comps around the corner that are significantly high. I can make $100,000. What you don't know, depending on where you're juxtaposed to that gas station, you'll be sitting on the market. No lender will fund on it very likely.
Well, and the appraiser's not going to say anything about. They don't do a soils report.
No.
They tell you what the comps are selling for. Uh-huh. Yeah, you don't want to buy a house next to a gas station.
Yeah,
that's just flipping 101.
Yeah,
or next to maybe a commercial strip that's got a dry cleaner. Mm-hmm. They also use toxic chemicals. So it's when you learn, you make mistakes, and then you don't make the same mistakes again if you're smart.
Agreed.
I mean, it happens.
Now talk to me like this, because I often and frequently talk about flipping. I had my brother Carl on the other day. He's a wholesaler, right? For those that, that don't want to get into flipping, that want to get into hard money, private money lending, right? Write that story out for me. Talk to me about that. I'm 35, right? So I'm 35, and I'm thinking about, I'm done with flipping. I want to get into hard money lending. Make a map for me.
Well, do you want to do it as a company?
Sure.
Well, I mean, I had I started in 84, and I started my business in 98, and I started doing private money in 06 as a business. Uh-huh. So what is that, 22 years?
Yeah, I think you're right.
I'd built a lot of relationships over those 22 years.
You keep saying business is about people.
Yeah, and so when I decided to be a private money lender, where we were the broker, when we fund a loan, we're the broker. As soon as the loan is funded, you become the servicing company.
What does that mean?
So say you came to me and said, hey, I got a couple $100,000. I don't want it in the stock market. I don't want it. I just want some passive income. I don't want a 3% CD. I want something that's conservative, but has a better return. So I would offer you a private money loan, and you put the money into the loan. What I did when we started the private money side, I sat down and wrote down a list of the names of every person I knew in the business, and I just started calling them.
So hit those phones at warm outreach. Hey, tell me what the phone call sounded like. Well, hey, this is Scott.
Yeah, hey, listen, we're starting a private money side. Here's my criteria. We're doing low loan to value, low risk loans. Back then we were doing 12.5%. And I used to refer to it as, hey, dip your toe. And we were doing small loans back then. $50,000, $60,000, $70,000 loans, and you'd get them to get your friends or business acquaintances or business friends that you'd done business with for years to get started in it, and then it all became it snowballed from a referral perspective. Mm-hmm. People would just say, hey, at cocktail parties, they'd say, hey, well, what are you doing? Are you in the stock market? No, I've been doing loans with Iron Oak Home Loans. It's great. I mean, I just get a check every month, or back then it was checks. Now it's all ACH. Yeah, we were cutting checks to the investors every month. Yeah. When we only had 25 or 30 loans on the books.
Yeah.
The one thing that was difficult about it was we didn't have a story. Story is really important. So when you talk to, if I got a referral for somebody who wanted to maybe be interested, the first question is, well, how long have you been doing it? Well, a couple months. When you first start. Oh, really? How many loans do you have on your books? 7. Okay. So there were some leaps of faith for people based on the recommendation of friends, because you start at 0. You start at no loans in your portfolio. And I think the company now is right around 400 loans, but that's because they'll do it's not a big company. They'll do 10 to 12 million in loans a month, but they might take 10 to 12 million in payoffs. And then they just keep rolling the money. But so to answer your question, it's really tough to get it started. You need to have had some experience in the real estate field, or a rich uncle, who's got $50 million, who says, "Yeah, okay, here's 10." Yeah. I'm joking, but I mean it's and then it's building the trust. It's making good loans that are safe loans that return the not only the interest payment every month, but then when the loan pays off, they get their full payoff.
And I have another question for you. I got many more questions. I'm gonna kind of say a phrase, and then you just tell me what you kind of think about it. Hard money companies hope you miss your payment so they can foreclose on you and take your property. What do you respond to that?
One word.
Go ahead.
Never.
Okay.
No,
help me understand that.
Well, our average credit score borrower is over 700. Again, there's a circumstance. It's a circumstance loan. Like Ashley made a great point tonight. She said, "Yeah, you've been a W-2 for the last 20 years. You started your own company, but you've only been doing it for a year. Sorry, Bank of America won't do that loan." So then they come to us. The other thing, that third thing that I forgot about a little while ago, the third thing was speed, ease, convenience.
What does that mean?
So remember when the values were just going crazy and there were multiple bidders?
Post-COVID.
Yeah, just, you'd put a property on the market for $500,000 and there'd be bids up to $700,000 and there'd be 12 people bidding on it, 3 days after it was on the market. Well, the one who said, "Hey, I can close in 3 days," would get the deal. We can close private money in 3 days.
You've done it for me.
If we have to.
You've done it for me.
Yeah. So, and what realtors would do, and this is a little sneaky, is they would call it cash offers. When it really wasn't cash. There was a private money loan behind it. But at the end of the day, if you close in 3 days, that's all we care about.
Well, I would even, to that, when you look at the RPA, you get to check a box, right, for how you're going to do the financing. If you collect the FHA box, it's going to come with the FHA a mandatory clause of autofill, right? This is the offer you're writing. There is no box that says hard money. The only alternative is cash. And so within the industry, and not making it right or wrong, within the industry, everybody acknowledges hard money as cash. So I think that, it pays to be able to close quickly. And people understand that when you have a hard money company involved, they have the cash. They'll send you a pre-approval. You or Chrissy Mathers, you'll call the agent. "Yeah, Jake, we're going to buy the property." Tell the other agent, "Yeah, we're good to go," right? Yep. And then you look at, we also talked about when somebody brings you a loan or a property that they want to close on, you fully vet it. And you're pretty confident after you vet it, you're going to close on the deal.
Yeah, we try to be most of the time. We get, I don't want to say complacent, but we get very comfortable. I mean, I have flippers who have done literally over 100 loans over the last, flips over the last 15 years.
Mm-hmm.
And we would get to the point with those flippers where we're so comfortable with them, we'd say, look, I need purchase contract, a prelim, and you need to get insurance, which, as we know these days, is tough.
Very difficult.
Get us those pieces of information and tell us when you need to close. Oh, you need to close on Thursday? Okay, it's Tuesday. Okay, but get me that stuff today, and I'll get it done. And that's the trust level that we have for the flippers, and the trust level that we have from our investors.
Mm-hmm.
But the huge thing is being able to close quickly.
Yeah,
It's
important.
Yeah,
That's a competitive advantage. But real quick, I kind of want to circle the wagon with that statement I said that hard money lenders are hoping that a guy, Jacob, the borrower that's looking to take down this flip, they're hoping that I don't make my payment so they can have this house. That isn't the truth. In fact, I guess what I'm saying is you don't want a property. You want somebody to pay on time.
No, and our investors want a payment stream. They don't want a phone call from me saying, "Hey, guess what? You own this property on 2nd Street in Stockton."
Yeah.
They don't want to know that. They don't want to hear that. They're going to be like, "What am I going to do with that?
Yeah.
What am I going to do with that?"
Yeah.
And here's the other thing about a loan. If you take a property back in a foreclosure and it goes to trustee sale,
Mm-hmm.
you only get your balance and interest and costs that are due. Now, if you get it back, if nobody buys it at trustee sale, that's probably because your bid was more than the property was worth, or very close, and there was going to be no profit in it. So then you get it back, then you have to deal with it. You have to go in, change the locks, see the condition, put one of your realtors on it to sell it. And during that time, your lender, who was the investor, is not getting a monthly payment. We're all about a payment stream. They want payments. I don't have one investor who's ever said,
I want the house.
I want the house. Because just one last thought on that. If you did a $200,000 loan on a house that's worth $700,000 and it goes to trustee sale, well, you can only ask for your balance, interest, and charges. Well, somebody's going to buy it at trustee sale because it's a $700,000 house and they only owe $200,000 plus, 8 months of interest, and so you're not going to get it anyway.
It doesn't work like that. So,
No.
for those of you that,
that's a myth.
yeah, you think that, hey, hard money lenders, they just want the house. Think about something that Scott said earlier. He said he has clients with double-digit millions that are investing this money to get passive returns every month, meaning they have to do nothing to get their return but wire the money and close on a deal. And nobody even has to know who they are, right? And do you think that if they're getting checks like that every month, they want to say, oh, you know what? That house for $500,000 that they're not making the payment on, I want to go over there and flip it. I want to go work really, really hard. Why would they do that? That makes no sense. And I'm not saying that nobody wants to flip, but those two things don't nearly mirror. You go from passive to, hey, I want to take back this property and now I want to flip it.
No, that just simply doesn't happen. No. If you're a multi-million-dollar funder, you just want a payment every month, and you live a lifestyle that may or may not rely on that money, but you still want it.
Still want it. Why not?
You don't want the house. So, yeah.
Now, can you tell me a time that you realized not just so much about lending, but the power of real estate? Where you were sitting there and you said, this is what I'm going to be doing for the rest of my life?
Well, like a conversation we've had recently is that in your life, you want to find something you really enjoy as a job vocation, and then you just want to go for it. And then ultimately, if your goal is to make a lot of money, then you need to own your own company. But for me, it took me 14 years to figure that out. I was making lots of money for other people for a long time. And then I went, well, maybe I want to make some of that money for me so that I don't have to do this forever. And so that was the approach.
That was the moment.
That was the moment. Well, that was the moment when all the subprime lenders. Well, no, it's not accurate. When I decided that I didn't want to have to wear a tie anymore.
Make your own rules. Work as hard as you want.
Yeah.
Would you think that? I mean, for those that don't know you, a lot of people on our live and in our school community that don't know you. I think that somebody could meet you, and if they only briefly met you, you speak well, very, very intelligent, very informed, very graceful at the same time, can think that you've always had it all together. Life's always been some easy trip, In fact, where you're at right now is because your great-grandfather left you millions and millions of dollars, right? Help me understand, were you always the smartest? Were you always the most gifted? Was it always easy for you in the things you did? Or are you kind of like everybody else? You just work hard.
You just said it. I mean, I was a pretty good hockey player. When I learned that I wasn't going to go and play in the NHL, I said, "Oh, I better figure out something else." No, I'm a 90% perspiration, 10% inspiration. I mean, I would never accuse myself of being a brilliant person. It was hard work. I can remember during the boom years of subprime and A paper when I was just brokering, I didn't have a processor because I didn't want one. I wanted to do it myself, and I would work 7 days a week. I said, I'm going to do what I need to do to get there. And that's what I did. And it wasn't genius. There was no genius involved. It was just hard work. There was a little bit of creativity, a little bit of people who knew me. If I told them something, they believed me. They trusted me because I'd never lied to them before. So there was no reason to expect that I would. And so, man, I've been very fortunate. But I did earn it. I worked for it. And it didn't come easy. Like I said, I can't remember what year it was, but I do still remember to this day. I should have kept that tax return. My adjusted gross income was $16,000. And that was when the light bulb went on. I said, well, I could either say, do you want fries with that order or go sell ties at Macy's or figure out something else in the lending industry. And that's when we converted to the private money lending company.
And never looked back and worked hard.
And not to say anything bad about anybody that works at McDonald's or sells ties. I don't mean that.
No, and it's not received like that.
Yeah.
We understand what you're saying. What you're saying is that life lifed and life happened and things significantly changed. And you are in a position, like many of us at times, of saying, how am I going to figure this out? Maybe I'll just go work for somebody. And there's nothing wrong with that. But everything you had probably, so much of our childhood is a projection of our adulthood. Hockey is no chump sport. Bust your teeth out, right? Let alone just being very skilled and being able to work with individuals. And so much of your life at that point, you bet on yourself before, right? Why not bet on yourself again? And so I think that's more of a story. It's way too easy to shame the guy or the gal that has pulled themselves up from their boots and made something of themselves, right? And that's what you did. And that's what I hope to do. Work my ass off and protect my reputation, build with individuals, be consistent. Rome, like you said, was not built in a day. And so every day, do a little bit more and get a little bit better. And what you hope, there's no guarantee in this road of entrepreneurship. There's a quote that says, the road to leadership is a very lonely path. And so I'm sure many, many times in your pursuit and on your journey, there was some lonely time.
Well, Jim and the guy I started my company with back in
I was going to
'98.
go with Jim next, so go ahead. Come on.
It was we talked a couple years into it after we got things rolling. We just said, boy, there were a few dark days. We just didn't know. Were we going to be able to pull this off? Were we going to be able to? And it was just like, he'd see me just dialing all day. Hey, this is what we're doing now. You got any money? Stock market's in the crapper, or whatever, and give this a shot.
Yeah.
And then we had to go get loans. And there was a time there where we had to have the balance of, okay, we got the loans, but do we have the money to fund them? And now that's just, it hasn't been an issue for years.
Yeah.
Usually there's more money than there is loans.
Yeah.
And so they have that challenge to deal with. But yeah, it's I mean, in anything in life, it's it's effort. I've known some people who are brilliant that don't have two nickels to rub together.
Agreed.
And so because they have no heart, no drive,
no consistency.
Yeah.
And you got to bet on yourself. You got to have faith of a mustard seed. You got to say, why not me? And then if everything tells you not to do it, friends tell you not to do it, if you do your homework, you put your heart into it, you put that dog into it, there's no turning back. We will not ring that bell. And we're okay with however it folds. If it works out, great. And if it doesn't, I'll brush it off and try something else.
That's right. One of the subprime lenders that I was an executive in, when we shut it down, that was when we decided to make the move. But I was getting calls for months, hey, from headhunters saying, hey, I know you did this. We're starting this company. We're going to give you some pretty heavy six figures if you come work for us. And I wasn't making much money. And I just kept saying, don't do it. Don't do it. Stay the course and just build this. And that's what we did.
I always look at that and there's nothing wrong with W-2.
No.
But I think some entrepreneurs are just born like that. And I always looked at sometimes making the tough decision for me is typically always the right decision. But in addition to that, be careful about receiving money to turn your back on your dreams. Meaning, go take a salary for 6 figures and put your dream on pause. And so the money was on the table. Scott, we want you. We want you. We know you are a producer. No, I bet on myself. And by not taking that money, you chase your dreams, and look at you on the beach chilling.
Well, it was just, and it was, like I said, when I got to an executive level with the company, that no longer was what I wanted to do in the business. I was basically a babysitter of vice presidents and sales managers, and it was a personnel job. It wasn't what I had wanted to do, and that was work with people. Work with people, help other people build their lives while building, of course, my own, to be honest. And again, it was, it falls back on that win-win. I mean, I love seeing people win. And if I'm part of that deal, if they're winning, I'm pretty sure I am too. And
it's a good barometer.
It's
for growth and success.
Yeah. And people respect that.
Yeah.
I respect that in other people, and people will respect that in me when they see that this isn't all about, my checkbook.
Yeah. Yeah.
And it's also about what you do for the community that you're with real estate that you're
serving.
Yeah, exactly. I mean, it's I was involved. I wasn't really a flipper. I was an investor in flips. I had a few people who said, like you, that they didn't have the money, and I said, okay, I'll give you a shot. And I came in as the investor, and I can remember going out and looking at some of these properties that were almost finished, and the neighbors on both sides of the house coming out saying, thank you. Thank you for turning this eyesore into a place where a family can move in.
Yeah. Yeah, it's powerful.
Yeah,
It's powerful. It's powerful.
it's been a good road.
It's
been a fun road.
We're gonna open it up here for Q&A. We have some folks in. Anybody on IG, we're about to open this up for Q&A. So if you want to drop a question in the comment section, if you have any thoughts you want to add, we have Brian here as well. We're open for it. I think that the one thing I just want to, we're supposed to open up a Q&A, but I'm going to make one exception. Because you bring up that story about having both neighbors, because I've been in that position where the neighbors come out and they're very thankful that this house that has been vacant, people have been breaking into it, been crimes, fires of the house, all types of things. And there's this narrative that investors, they buy up the houses and they force the real estate market up and they make it hard for the first time investor. And I just want to go on record by saying this. This is based on my experience and things that I know I've done. Let me just speak for myself. When you have an investor go into a property and improve a property, that typically, like Scott said, either a borrower or a house. What was that quote? Hard money.
Why you need a private money loan?
Yeah, why do you need a private money loan?
We refer to it as private money, by the way.
Money,
hard money sounds negative.
Okay, private.
That's okay.
No, I'm going to work on that. Private.
So people get private money. Well, private money in a sentence is for people, borrowers, or properties that don't qualify for conventional financing.
Absolutely.
Conventional financing has a list of boxes that need to be checked.
Yes.
And if you can't check all those, then and the reason they don't do it's not because they want it to be difficult. Mm-hmm. It's because most conventional lenders, they sell those loans, and those loans, the qualifications are created by the people buying those REITs, mm-hmm. those packages of loans. Mm-hmm. And if they audit those loans and they qualify, they just take it back.
Take it back. Yep, they'll call it due. So essentially, what I'm saying is that when you see somebody go into a neighborhood and acquire a property that's distressed and improve it, and then put it on the market at a premium because they put all new plumbing in, all new electrical, they completely beautify the property.
Floors, doors, windows, roofs.
Everything.
Kitchens, bathrooms.
That person had to put themselves in a position to get qualified for this private money loan by having a good credit score and by putting up 30% of the debt, and then also coming out their own pocket with the construction and the holding costs and the title and the escrow, once again taking on and assuming a lot of risk. Because a lot of things can happen. If your average flip takes 3 to 4 months to flip and sell, exchange hands, in 3 to 4 months, real estate can change like this. So you have individuals that go out there and pioneer, take on that risk, navigate it, and beautify a neighborhood. Now that person, whether it be a single mom or a single dad or a first-time buyer or a family looking to upgrade, they could not have bought that property any other way unless they bought it cash. So the government doesn't go out here and fix these distressed properties, these abated properties, these abandoned properties. Somebody has to be entrepreneurial and go do the work. And then some lender with their finances or their business's finances, they have to believe in that person in the property and loan that money. Everybody's taking risk. If it doesn't work out, the government doesn't come back in and say, hey, Scott, let's give you your investment back. And Mr. Flipper, let me give you your money back. Everybody takes a risk and now can put this property on the market so these individuals can buy the property. So I just wanted to go on record with that because sometimes I'll get these, and I don't care, I get these DMs or comments, you're a flipper, you're just trying to put single moms out of properties. You don't know what you're talking about.
Yeah, that's pretty unfair. You know what, though? One last comment I'd like to make about qualifying a private money borrower. And we try to simplify it. 3 things: the collateral, ability to repay, and the exit strategy. And an example would be the collateral. Okay, it's a distressed property that they're buying cheap. The ability to repay, you find it's the borrower who is 30% down, plus they've got other financial cash assets. They got the money to do the remodel. And then the exit strategy. Well, when it's a flip, the exit strategy is very clear. They're going to sell the house. It's pretty clear. Yeah, so that's how simple we try to make it. Now, there's a lot more to it than that. But if you check those 3 boxes with us, well, with them, I keep calling it us because
Hey, you're still broker of record.
I'm still the broker of
So
record.
it's us.
But anyway, I just wanted to share that.
Absolutely. Thank you so much for coming on. But we're not exiting yet. Let's get these questions because it sounds like a couple people have some questions.
Okay, well, I guess to keep it short, would you ever recommend someone in the space that a lot of us are at in the community to get into that hard money space as a lender?
So Zach's question is do you recommend people growing in real estate getting into private money as lenders themselves?
Well, absolutely. I mean, you can do both. You can be a flipper, and you can also be a lender. Mm-hmm. You just have to have the money. That's the.
Yeah.
I'm not trying to be,
No.
You're being cavalier. That's just the bottom line.
Yeah.
Yeah. I mean, one of the things that's happened with Iron Oak is we've had flippers, and this is no joke. They made so much money flipping that they became 7-figure funders with us because they said, you know what? Flipping has been great. They recognize how much hard work it is. Mm-hmm. And they've said, okay, I've made a couple $1 million that I've socked away. They're like, I just want to start. I want to be on the other side of the loan. I want to be the guy lending the money.
Right.
And we've had several of those over the years, but it's been a long time. It takes time.
It takes time.
I don't know if that answered the question though, but
does that answer your question, Zach?
Yes, that definitely answers the question.
Oh, okay, good.
Terrific. We have a question. Go to repeat that question for me, please.
It's from Sam Nathaniel Brown. I am looking for a partner to do reentry housing with. I'm hoping to partner with someone who can do a master lease or sandwich lease. Are you all willing to do, or do you know anyone that may be willing to do that?
So Sam Brown is saying that he works, I know that gentleman, he's a phenomenal guy, smart guy, and he works in Southern California with people that are re-entering society, right? Those that have served their time and are looking to further the rehabilitation, get on their feet. And this is kind of like a creative housing, obviously, right? And he's looking for funding for somebody that would do the lending on very much like a home, like a care home facility, but for those re-entering, being released from prison.
Okay, so you want a loan on the housing?
It sounds like he went on the housing, probably not on the business.
I'm looking for a partner to do reentry housing with. I'm hoping to partner with someone who can do a master lease or sandwich lease.
You know, I don't know exactly what he's asking, but if I was to assume, well, let's just ask like this: if somebody was looking to get financing on
a care home
facility, as long as the numbers math and they have the exit strategy, then it checks the box. Potentially.
Yeah, we haven't done a lot of care facilities, but I look at them as pretty lendable entities, because if you've got, actually that's not true. I actually did a loan once, it was in Hayward, 2 homes in a court right next to each other. Mm-hmm. And it was all guys who'd been rehabilitated out of jail. And there was actually state subsidies for their rent, but they had to have a job. Mm-hmm. And I think they had to pay $100 of the rent. But these were just 2 houses that were owned by an individual. We made loans on them because the revenue was for the owner of the 2 homes was actually really good.
Yeah.
But it wasn't like a I don't want to call it a dormitory, but a facility that had basic rooms. But I think, I don't know if this answers the question, but we could lend on it.
Yeah.
I'm not quite sure I understand the lease.
Yeah, I think he'll add some more context, but I think that a lot of people, here's another question that I thought about. A lot of people wonder if private money companies do business lending. Is it all just real estate lending?
Oh, okay. If that's the question, no.
Okay.
We have to have at least, yeah.
That's a very different animal.
Yeah. It's got to be collateralized. We have to have a hard asset of real estate. It's not on a, on a net sheet of a business saying, yeah, it's doing this amount of revenue. You can't really collateralize that. You can't say, well, if you don't pay, we're going to start taking the revenue from the business. I mean, that may be possible, but that was not in our lane, so to speak.
What do you when you look at collateral? Is there any data or even your opinion on when you loan with collateral, your probability of being paid back increases significantly? Kind of a random question, but
yeah, like 100% increases.
Yeah. People don't want to lose that asset.
No, especially if they're putting 30, 35% down. I mean, there's no question about the fact that the lending business, from A paper to private money, I use the term life happens. You got a two income household, one of the spouses die, and the income drops 50% or whatever. Well, that's a life situation. People get fired from jobs. People circumstances that cause people not to be able to pay,
right?
And they end up not making what I consider to be the decision to sell when you can no longer afford it.
Yeah.
Which is unfortunate, but that people do that sometimes, and then they end up losing the house.
Yeah, spiraling.
But investors that do loans for Iron Oak, and we've got probably 450. Not one of them wants a house back. Not one of them.
We talked about that earlier.
Yeah.
There are a variety of different lenders. I mean, when you look at private money, right? There's a variety of different products out there. Some people offer the purchase price and loan amount. Some people offer
purchase price and rehab.
Forgive me. Correct. Thanks for the correction.
Purchase price and rehab funds.
Yeah, purchase price and rehab fund, and then some. Their LTV may be lower or higher. What is the determination in each company or your company, or give me some shed some light on that for me?
Well, we have never been a lender that will lend more than 100% of the purchase price. It's always, well, there's two ways. One with cash down, but I'll just give you one example. Say you own a piece of property, it's worth $400,000, it's free and clear. You want to buy this other one, it's $400,000. I will make you a $400,000 loan, but I'm going to be a first on both properties. I'm at 50% loan to value because I got $800,000 in collateral, and so you could actually buy something without having to come in with any money.
There we go. There we have it, folks.
But you got to have that other property.
You got to have that other property.
Maybe you inherited it, or maybe you bought it cheap and paid it off and remodeled it, and now it's worth a lot more money. And but yeah, that another piece of collateral is just as good as cash for us, because typically it didn't just fall out of the sky into your lap. You did something to earn that property, and appreciation may have been a huge part of it, but you're still not going to want to risk it.
No.
And we do a lot of that. I have a couple of guys that I've done for years who would keep a property free and clear so that they could say, I don't want to put any money down, but I need this one, and this is what and I'd say, no problem.
Let's do it. Yeah. And just like a flipper or an investor needs to have an exit strategy, you're an investor as well. And you need to have an exit strategy. That's how you're being responsible to yourself, meaning that if the amount comes due or they fall behind, your exit strategy to protect your investment should be that collateral or something.
Yeah, it is. I mean, I can't tell you how many hundreds of loans I've done over the years, but you can typically, we just don't get a lot of situations like that. It's you have to have something catastrophic. I'll give you just one example. It's pretty entertaining, actually, but it's not at the same time. Husband and wife, who had once been divorced and then remarried each other again.
What a good idea.
That's, yeah, exactly. They owned 2 Indian restaurants. Well, she got mad, went into the restaurant, started emptying the till. He came in and got physical. Well, he went to, he got a couple of bracelets.
Okay, for sure.
Got kicked out of the
On
house.
vacation.
Got kicked out of the house. And he said, well, I'm not going to make the payments anymore. And she said, I'm not going to make the payments either. And so, there was this, bumping heads. And it ended up going to court. And the judge said, sell the house. But nobody paid for a long time. We put it in foreclosure, and we kept extending the foreclosure because we knew it was a court order to sell. But it's a life situation. Something happened. Something bad happened, and
That's not like they both wanted to be right, but that's a whole nother story.
yeah. Well, she probably should have been taking the money, and he probably shouldn't have hit her.
Yeah, for sure.
For sure.
Forgive me.
Anyway.
I don't promote violence. I guess what I'm
No,
saying.
we never do.
Yeah, in not paying, going back and forth, right?
But the point is that neither one of them, they both refused to pay.
Yeah.
And it wasn't like there wasn't the money to pay.
Yeah,
It was
yeah.
just, it was a,
Yeah.
if I can say this, a pissing match.
That's what I kind of was getting at. Yeah.
Yeah.
Right
Anyway.
Right on. Brian, how about yourself? You got something for us?
Yeah, I think what's a deal you would have financed years ago but wouldn't touch today?
So I think and correct me if I'm wrong, what you're saying is after you've grown in real estate and his appetite has changed, experiences changed, how has his perspective on investing and funding loans changed? Has he become more conservative?
Yes. The first answer is yes. We have become more conservative. And going further, that guy who hit his wife, we wouldn't make a loan to him either anymore. So it's not just the property, but it could be the client. So you have a bad client, then we don't want to do business with them. And from a collateral standpoint, we used to fund some major construction. And we've really shied away from that, and also commercial.
Why?
Because we've ended up with commercial. We've never gotten one back, but we learned that if you take back a commercial property, there's only so much of the population that wants a commercial property.
You can bleed on a commercial property.
Yeah, you could end up sitting on it for a while, but you make a loan on a $350,000 home, $400,000 home in Stockton, and you get it back. There's lots of people that will buy that house. So we wanted to not make a mistake before we made a mistake. So we kind of mitigated that, and then also rural properties now because of insurance. That's a huge hot button right now. I mean, fair plan may be the only answer to a rural property. And if you talk to those people down what's called down south that have had fair plan,
California fair plan.
Yeah, they're getting pennies on the dollar.
And the insurance doesn't cover detached garages and things like that.
They'll do that. You can get fair plan when it's last resort, but it's not the greatest insurance.
No,
it just is what it is. But rural properties right now we're staying away from.
What about ag?
Don't do them at all.
Kind of similar.
Well, the problem is if you've got 100 acre, or maybe not 100 acre, but a large parcel of almonds. Well, my understanding, unless the laws have changed, if you were to foreclose on that, you can't just say, okay, well now that income comes to us. That could have changed, but in the past,
you're right, because it's a business. It's kind of separate.
Yeah. So we don't do ag loans.
Right.
We really never have. One thing you have to be careful about is you could have a house with small ag that's zoned, and we have done those before. But there's a higher risk to that. We won't do them anymore. So yeah, it's definitely moving more conservative as time goes by, and it's just safer for the investors. It's just smarter lending. There's no one loan that we absolutely have to make. You know what I mean?
Right.
We have lots of opportunities. And,
Yeah.
And there's agricultural lenders too, by the way.
Yeah. They're more suited for a product like that. Yeah. You got another question,
Yeah,
Brian?
one more. So this one's if you were in my position, since I'm 22 now, I just turned 22 last month. Getting into real estate, trying to scale fast but safely, what would you do differently from most investors are doing?
If you want to scale quickly,
Safely.
Oh.
As well.
yeah, safely, I definitely support that quickly. I mean, you've got to somehow have gotten lucky and have some money. It's the sad truth of building in real estate is seed money. Find a partner who, and I've seen this where people who are younger who get in it, they find someone who is a close friend who maybe has been very successful, and they partner up. And that person is just a funder. The partner is just a funder, and the guy that wants to scale quickly is the guy that's, got the work gloves on and is willing to put a pitchfork into the ground if he has to, or a pickaxe, and willing to be up on the roof putting the air conditioning unit up there. Mm-hmm. They're doing the sweat equity. I don't know any other way.
Brian asked me.
Money.
Brian was asking me the other day. He has he works with a lot of different people. Great networker, phenomenal. This guy's part of my Deal Master 201 community, active member, founding member. He's everything, and that's one reason why I'm here today. Many other people, some couldn't make it, but he's doing all the things he has to do. He works at 9 to 5, then he gets off of work. Right before you got here, he was here in work boots and dirt and dust all over himself. He said, "Man, I'm finishing up work. I'm gonna run home, shower up, and pop back over."
I got a lot of respect for that.
He's the one that called and asked if you guys want some coffee. He said, "I'm about to get in the shower. I'll grab coffee." I said they said no. So, Brian, thank you so much. I appreciate you. Definitely.
Yeah, you're going to do well. I mean, it's 90% perspiration, 10% inspiration.
10% inspiration.
I truly believe that.
He's networking with some great people that I've had the chance to formally meet that kind of fit that type of archetype. What measure or what metric would you give him in structuring a deal like that to be able to present to somebody? So Brian says, "Hey, I have this deal for $100,000. It can be sold for $400,000. I'll improve it for another $100,000.
Call me." If those are the numbers, call me.
We're gonna make sure you get his number, okay? What would the math on something? What would he expect to? Because he asked him essentially, how should I structure it? Are we partners? Should I take an interest rate? Should I take equity? What do you think would be fair for a guy like him to try to pitch?
This is what I would do for people if he came to me, especially if it was his first deal. See, what I want to see is I just want to nibble. I want to see him hit the home run.
That's true.
At this stage of my life, if I was in my 30s, it might be a different conversation. But today, I would say we do what's called a contingent interest agreement. I'd say, okay, I just want an interest rate on my loan and maybe 10% of the net profit. Maybe less. Now, if I was in my 30s, it'd be a 50-50. I was building my empire too. But today, without sounding cavalier, it's not about the money for me anymore as much as I go find that $400,000 house that you can get for $100,000, and then we'll do our first deal together.
Right, you're right around the corner. He's tracking it down, but that's good. I think that we thank you for staying too. We push over our time. And so I want to thank you again so much for taking your whole day out, fighting through traffic. I know you just got back in the country, and
we did.
And every time you say you're going to do something, you do it. And so I don't know anybody else's podcast you've been on.
Just two.
Just two. Both of them were mine. Huh? Every time you say you're going to do it.
I would do anything for you, though.
Thank you. Likewise.
I just tell a real quick story because I think it's meaningful for your audience and your folks. That I met Jacob under kind of an interesting circumstance. One of our real long time clients passed away, I just happened to be going to his funeral, and for some reason I needed to come over to your office that day. And when we met, there was just something about you that I just went, I like this guy. I can see he's a grinder. He will do whatever it takes. And so I talk to him sometimes at 8:00 at night and you're still working. It's you're
Even FaceTime sometimes.
You're an impressive young man, and your folks should hang with you.
Thank you. That means a lot, and I really appreciate and value our relationship. And again, just thank you so much for everything. I couldn't have been here if you didn't bet on me, if you didn't count on me, if you didn't take the risk, right? And that that has allowed me to help others and inspire others. So I just thank you, and your investment in me and faith in me, it continues to pay off. So I think you should know that as well, that we're passing it on, and it started with you.
Well, one of the things that I'm not winning any Pulitzer Prizes, and I'm not winning any IQ tests, but one of the things that I learned over my lifetime, and it comes with life experience, is first impressions. And I got a real good first impression with you.
Thank you.
And that's where we're here. That's why we're here today.
Thank you,
at this
brother.
point.
Thank you so much.
Yeah.
Thank you so much. I appreciate you. Well, this is another episode of Growing in Real Estate. Scott, you have any last words for anybody?
No, those were it.
Okay. Oh, okay. Okay, for sure. Well, can you give Iron Oak a shout out?
What?
Just give us a shout out about Iron Oak, the phone number where you can find them if you're looking for a loan.
Yeah. If you're looking for a private money loan and you meet their criteria, it's a pretty simple criteria, but it does take money down, or other supplemental collateral to get the loan done.
Yeah, for sure.
But if you have no money and you have a $400,000 deal, that's going to be $400,000 and you only need $100,000, then
call Scott.
Give him my phone number.
You got it. Terrific.
I'll put the deal together.
Well, this is another episode of Growing in Real Estate. I'm your host, Jacob Davenport. We had the pleasure to have Scott Limey here today, and he brought so many jewels and so much value. And like he said, if you have a $400,000 ARV property and you only need $100,000, call me. I'll connect you with him. We'll close tomorrow. But in short, it's all about inspiring, connecting with the right people. Some of the things we discussed today is about reputation, is about the process of hard money lending, of how to mitigate risk. And he doubled down. If you really paid attention, Scott told you just how important it is to understand your level of risk and always lean into being more conservative, because there's the tortoise and the hare. You can be the hare all you want, or you can be the tortoise and you can do what we call the slow but for sure. But in short, that's just my small synopsis of some of the things we talked about. Thank you so much for tuning in. We will see you all real soon. Scott, thank you so much
for having me.
Love and appreciate you, brother.
You too.
Right
you
on.
Too. All right.
Take care, you all.